Well, the stock markets took a little bit of a rest here today as we saw all four major U.S. indices finish in the red. A lot of the emerging markets were in the red today as well. Some bad news out of Argentina and a few other things creeping up. But for the most part, we do retain our bullish postures. In fact, before pulling back near the end of the day, we did have the NASDAQ composite and the Russell 2000 hit all-time highs here in the United States. In today's trade application, I want to focus on a couple of themes that continue to work, financial sector along with the Canadian stock market. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 30th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience here tonight. Remember that you can go to YouTube and subscribe to our channel there, and while you're doing that, check out the description area that will allow you to sign up for our email distribution list as well, which entitles you to not only an alert whenever we do post these videos, but also what stocks are giving you overbought and oversold cluster signals within the S&P 500. In addition to YouTube, we're also heavy users of Twitter. You're welcome to follow me at Brandon Van Zee is my handle. And make sure you're clicking like and retweet on the Market Outlook focused tweets if you do appreciate these videos on a daily basis. We're also on Facebook. You can see the web address of our group embedded in the logo in front of you. Feel free to join us over there as well. All right, with that, let's go ahead and dive into some analysis on the markets here. As you can see, I've got the four major indices in the United States pulled up in front of us. This is chart 4B for those of you that are premium market scholars following along at home. And remember, what we're looking at here with this particular chart setup is just how do the major U.S. indices look in terms of a market posture using the market forecast indicator. The market forecast indicator can be found on the Thinkorswim platform. And as you can see right here, we do retain bullish postures across the board. We know that very easily with this chart setup because we can see the background color of the chart is green over today's candle in all of those cases. So as I mentioned before, stock market was down across the board here today. Our worst performer was the Dow. It was down 0.53%, but that does not change the trend. The trend is still bullish. We may very well have a few days of pullback here, but for the most part, if you're still asking yourself, what side of the equation would you rather be on? Well, if you want to trade with the tape as opposed to against it, you'd probably want to be on the bullish side of the equation. As I mentioned in the intro, notice down below here on the NASDAQ composite, we've got this green label appearing that says yearly high today. We've got the same green label over here on the Russell 2000. So not only yearly highs, but we actually have all-time highs in both of those indices. And we weren't all that far away from hitting new all-time highs in the S&P 500 as well. But as I mentioned, we do have some maybe rolling over action that's taking place here. Notice it looks a little bit worse on the Dow Jones, where we do have a close below the low of the high day, which could tell us that maybe there's another day or two of downside action. But as always, what we're looking for is a clear break of true support. And if we are still finding some bounce around the rising 30-day moving average, I'm not going to panic about this type of a move. These are natural, breathe in, breathe out moments for the market here. One thing that I will point out is that we do have what's known as a bullish intermediate confirmation signal on the S&P 500. You can see that over here where we got the green line in the upper reversal zone, red line in the lower reversal zone, and we also have that on the Dow. Same situation exists there, green line upper reversal zone, red line lower reversal zone, and the mentality behind that trade signal is basically a buy the dips mentality. It's basically telling us we still have a trend that is strongly bullish, but we have a momentary pullback in price. So if you're waiting for some sort of a pullback to get involved in the markets, then maybe you start dipping your toe in the water here just a little bit right now. So strong moves across the board here from an intermediate term perspective, even though we did have a one-day pullback. Let's take a peek now at our next chart. This will be chart 4C. And this will be our three green arrows chart. And as you can see, the background colors are light green in all four of these charts perspective. And again, what that means in this chart setup is that we have three green arrows across the board. We have positive action on price versus the 30-day moving average. We also have positive action on the MACD and on the stochastics in all four of these cases. So this is an environment where trend trading to the long side of the market can be a healthy choice. Many of you attend my Monday top-down trend trading class that I conduct on noon, which, by the way, gives me a moment to mention that, of course, the stock market is going to be closed this next Monday for Labor Day, so no classes held here at Market Scholars, no Market Outlook video either. But normally I teach that class on Mondays, and of course we've been buyers of the market all year, and we've got some pretty good trenders in our portfolio already, and that continues to be the environment that we're in. We don't have any broken down support levels in any of these markets. If you're expecting the market to melt down right here, you're just purely guessing at this point. The trends remain intact. Let's take a peek here at our next chart setup. This will be chart 4D, and this is a longer term view here. Remember, these particular charts are 3 years in length as opposed to 3 months. What we're looking at are crossovers of the moving averages themselves. The orange line is the 10-period moving average. The blue line is the 40-period moving average, and we're using that on a weekly aggregation period. Basically, if the chart background color is green, it means we have bullish long-term posture, and that's been the case for over 2 years. Everybody that's been fighting this bull market for the last 2 years probably doesn't feel so good right now, as they've been run over by the bulls. At some point that will change, but it's not up to us to make that decision of when it will happen. It's up to us to respond and react to seeing how the stock market is acting, not for us to guess. And right now, it still shows that bullish sentiment is still alive and well, and that should be where your next best trade is to the long side of the market. As we take a peek now at some of our 12 grids, let's get into our intra-market analysis. And as that's pulling up here, reminder that the background colors, when they're green, it means we have a bullish posture. When they're red, it means we have a bearish posture using the intermediate term line on the market forecast indicator. So as we look at this, one thing I did want to point out right off the bat, the VIX had a big move today. VIX was up over 10% today. Now, keep in mind context here. The VIX was basically operating from historically low levels, so even a 10% move doesn't kind of shake loose the fears, the true fears of the marketplace. This is, as you can see, where we reside right now in the VIX is still middle of the chart over the last 3 months. So yes, today was a big move, but let's not make too much out of it at this current juncture. As you can see with the Treasury yields, 10-year Treasury yields, we did have a down moving kind of candle here today, where we did have a nice reversion to the mean on yields. They came pretty close to that moving average and then rejected it and are going lower. Now notice the opposite is taking place down below with the U.S. government bonds. We had some of those oversold cluster signals down here, and then we reverted to the mean back higher and pulled back a little bit last week, but then today having a nice little bounce. So we'll see where that takes us. Right now the bounce would be a little bit premature, just simply because the posture remains bearish right here, but it's something to at least watch and act accordingly if that posture does change. Some of the other charts out there that are of interest, the REITs have been on a pretty good run here recently, but even they cooled off here today. You can see REITs were down 0.64% according to VNQ. The US dollar was basically flat here today, but a lot of us have been watching that because it does kind of set our expectations for different things like commodities and foreign markets and different things like that. Crude oil was actually a nice mover today. Notice in the lower right-hand corner, crude oil was up almost 1% here today and has nicely crossed up and through that moving average. We're still kind of in the middle of the chart there, so we're not in what I would consider to be a strong trend right now, but at least we're not scraping the bottom like we were here a couple of weeks back. Let's take a peek at our next set of 12 grids now. This will be our foreign stock markets 12 grid, and this will be chart 4F for those of you that are following along at home. As you can see here, we do continue to have more green charts than pink ones. So on the whole, that says a lot about bullish sentiment out there. However, as I noted in the intro, we did have some negative consequences in the foreign markets. There was a lot of hubbub about Argentina here today. raising interest rates from like 46% all the way up to 60%. So they have kind of runaway inflation types of situations they got to deal with there. And so it always takes an event like that to remind us that there is risk in the marketplace. In fact, we had a long discussion about that in my question and answer class here today. For those of you that are premium market scholars, you're welcome to check out that recording. But someone had asked me if this is the time to get involved in the international markets versus the U.S. based markets. And so we kind of talked about some of the risks and rewards that were present. But I would say on the whole, right now, we do see some evidence to suggest stabilization in many of these areas. Now, I mentioned in the intro that we're going to be talking about a Canadian stock in our trade application here today. So I did want to point out Canada here, kind of in the middle. We had a pullback in Canada here today, but notice that the background color of the chart is still green, and we're still above a rising moving average. In fact, let me right-click and maximize that, and also show that we have what's known as a bullish intermediate confirmation signal on Canada. This is EWC. Now, of course, Canada has been in the news here, possibly getting a deal done with the United States and tying together of a quasi-NAFTA agreement. But we'll just have to see where the news ferry takes us starting tomorrow. But for right now, what we can say from a technical analysis perspective is that we have an upward moving green line here, our intermediate line, combined with the red line in the lower reversal zone. That those two things together tells us that we have an intermediate confirmation signal, a bullish intermediate confirmation signal. Also keep in mind that while the blue line is not part of that particular confirmation, that trade signal, that we oftentimes do like to look at its placement. And what we found is that the success rate of that type of a trade, if you're going to go bullish on something like this, is a little bit better when the blue line is below 50 but above 20, and that's where we find ourselves right now. So maybe a little bit more of an ideal setup there than otherwise. So just be aware, Canada is hanging in there okay at this juncture. Let's take a peek here now at our sector compared, or actually our U.S. sectors 12 grid right here. This is 4G for those of you that are following along at home. And as you can see, we only have one problem spot, and that's the consumer staples down here in the lower left-hand corner. That's our only pink chart on the board. All other sectors in the United States are still considered to be bullish posture using the intermediate term line. I wanted to point out the financials. So financials are right up here. So notice that financials just hit a new 3-month high 3 days ago. We've now had a little bit of a pullback back towards that rising moving average, but we retain that bullish posture. We know that because we have a green background color right there, but also as I expand this chart, you can see that not only does Canada have a bullish intermediate confirmation signal, but so does XLF, the ticker symbol of the ETF that tracks the financial stocks in the S&P 500 here in the United States. And you'll notice we've got that green line in the upper reversal zone suggesting strong bullish posture. We also have the red line in the lower reversal zone telling us that we have a pullback on hand. And we also have that blue line firmly between 50 and 20. So another one of those more ideal bullish intermediate confirmation signals for those of you that have been wanting to take advantage of that renewed uptrend, but have just been waiting for a pullback for that to occur. And so that's where we find ourselves right now with XLF. So a lot of those areas of the U.S. markets continue to remain resilient despite a little bit of a hiccup here in price today. Now, as I'm thinking about some of the other things I want to share with you here, I do want to remind you that you can watch these videos on the Market Scholars website. And so remember, you can just come into the blog here. You don't have to be a premium member to see the Market Outlook tweets or blog post, I should say. And you can actually watch this video directly in here. And while you're there, if you could do 3 clicks for David and I, we'd certainly appreciate that. Click number 1 would just be clicking like here on the tweet directly below it. Thank you to you 105 that did that for me last time. You can also click Facebook like right here on this other kind of icon that we have with a thumbs up. And then down below, this one's a little harder to see, but you can see there's a little like thing down below here that has a heart next to it. That just tells us on our website that you like the content as well. Again, all of that is helping us realize whether our time that we spend putting these videos together is worthwhile to you guys or not. So thank you in advance for regularly doing that. So with that out of the way, let's now talk about our trade application example for the day. And so I wanted to come back over here, in this case to chart 4A, just a regular one grid for the market forecast setup. And I want to take a peek here at our chart of TD, and it is football season. Of course, I got my fantasy football draft coming up here on Monday, and college football starts, and NFL the weekend after that. Fun times if you're a football fan. Well, in this case, TD does not stand for touchdown. It does stand for Toronto Dominion Bank, and as the name sounds, it is a company that is based in Toronto. It's a Canadian company, and of course, as a banking company, it's within the financial sector. So I kind of pointed that out a moment ago, where you've got your Canadian ETF, EWC, giving us a bullish intermediate confirmation signal. I also showed you that the financial sector, XLF, also has a bullish intermediate confirmation signal. So if we kind of tie those two themes together, a financial stock in Canada, then we're here with Toronto Dominion. Now you'll notice that Toronto Dominion actually reported their earnings here today. So that's out of the way, which is nice. Now you will see that the stock market sent it lower by 1%. So there is certainly some risk that maybe there needs to be a little bit more selling on this. But what kind of attracted me to it was not just the fact that it was in Canada and a financial, but the fact that we've still got a rising 30-day moving average here. That's why it's colored in green. And we clearly still have a bullish uptrend intact. We still have higher highs and higher lows. And if somebody was waiting for some sort of a pullback in price, you can see that we also have what's known as a bullish intermediate confirmation signal here. We have the green line in the upper reversal zone, the red line in the lower reversal zone, and the blue line is real close to 50. It's not quite below 50 where you might like to see it, but remember, that's just kind of a cherry on top. It's not part of the trade signal itself, so I'll let that be for right now. But again, there might be another day of downside pressure on this. It's hard to say, but in the full spirit of having a bullish trend of higher highs and higher lows and being in some healthier areas of the market, I thought it was worthwhile at least considering from an educational perspective as we place a trade here in paper money. So what I thought we would do with this particular trade is look at a long call trade. So let's go over here to the trade tab. Now notice that this thing only has implied volatility of 14% for the most part. So these would be considered fairly cheap options. You know, you're not paying through the nose on the volatility component of it, which is kind of nice when you're the buyer of contracts like we will be in this case. So for this, I'm going out to January 2019 with 141 days until expiration. And I'm simply going to look to buy calls on this, which is a leveraged bet that that particular stock chart will continue to track higher in the months to come. Now what I typically do is look for a delta of around 70. That brings us to a delta of 72 in this case if I'm going out there to January. And you'll notice that we have a bid of 390, an ask of 440, and that brings us to the 57.50 strike price January 2019. And so as we look at that, you'll notice that this thing did have a little bit of trading involved with it today. There were 26 contracts trading hands here today. And the last traded price was $4. And so that's where I'm going to try to get filled. Now, some of you that have been around the block a time or two, you'll know that right now, the chances of us getting filled first thing tomorrow morning probably aren't great. And the reason I say that is $4 is a little bit closer to the bid price than it is the ask. We'd probably have a much greater chance of getting filled if we put in our order at like $4.20 or something along those lines. Now, to each their own. It depends on how aggressive you want to be with these various trades. But as I mentioned, with today being the kind of the first true pullback of the markets, it's entirely possible we get another down day or two without jeopardizing the bullish uptrend. And so I'm willing to be a little bit more patient with the fill in this particular case. I am going to shoot for getting filled at $4. And what I'll do is I'll put it out there as a good till cancel order rather than just a day order, just in case I don't get filled tomorrow. So remember that if we get filled at $4 and we add that to the strike price of $57.50, it's effectively saying that our break even would be $61.50. So as we come back over here to the chart, you ask yourself, do you believe this stock will be up here at $61.50 or higher come January of next year, which is basically right back to the top that it hit just yesterday. So as long as you think this price will be higher than where it was trading yesterday in January, then it might be an effective use of capital. On the other hand, if you think we're about ready to hit the skids in the market and we're going to have some bears coming into play, maybe it's not the right trade for you. Remember, when we're buying calls, it is a low probability trade because we do lose money off of time decay. So it's not any sort of a home run type of a trade or any guarantee or anything like that. Not that there are ever any guarantees, but in general, know that anytime you buy calls, you have a low probability trade on your hand. The benefit of doing the trade is that you can spend a relatively small amount of money to have upside exposure in the case of buying a call. So if we were to buy this, remember, we would be spending $400 on that if we get filled. If we get filled at $4 on an option, which controls 100 shares of stock, we're only spending $400 out of our account to control 100 shares of stock. Remember, if we were to buy 100 shares of stock right now with this stock trading around $60, we'd be spending $6,000. So that's the appeal of this trade, is that we can spend a fraction of what we normally would when buying the stock, have that upside action. The downside is that we are not entitled to the dividends, and we actually need the stock to go above our break even, because if it just goes sideways, we're not going to make any money on that trade. So it is a directional lower probability trade, but it is one that applies leverage to give you some decent returns if your bet pans out. So with that out of the way, let's go ahead and place that trade. I'm just going to come over here to the ask price and click on it. And again, I am going to try to get filled here at $4. And I'm not assuming I'm going to get filled tomorrow unless we have another pullback in the stock market. And so I'm going to go ahead and click on the day and change it to GTC or good till cancel instead. And that way, if I get filled, later this week or early next week, so be it, if this continues to be a little bit of a stalling period in the market like we've seen in the last day or two. So I'm just going to click confirm and send. There's the $400 I'm spending on that, and off we go. All right, well, I want to thank you for joining me here tonight. It's always a pleasure to go to work for you. As we mentioned, stock market did have a stalling day today. We had downside action across the board. However, our longer term trends are still intact, so we're still interested in trades to the upside selectively. So with that, this will be my last appearance before the weekend. So I want to wish you a happy Labor Day holiday. Enjoy yourself. Unplug from the market a little bit. Of course, we'll be back in full swing next Tuesday. David will be back with you tomorrow, so enjoy his presentation as well. Have a great night, everybody. Take care and best of success with your trades and your investments.